The broadcast is now starting. All attendees are in listen-only mode.
All right, good morning, everybody. Good morning. This is Disruptive Traders TV, February 5th, 2020, the Roaring 20s. It's the Power of 62 session. My name is Todd Groskreutz. I will be answering your questions today. Thanks for coming out. Can everybody hear me okay? Boom, 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 boom. All right, let's get through this. Give everybody a couple minutes to get on. Risk warning and trading disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors or traders. There are no guarantees of profit. Most Forex traders lose money trading. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts or uncertainties. This presentation and all of its content, including past trades and potential trade setups, is for educational and informational purposes only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantees of profit of any kind. The presenter is not a licensed financial professional and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting, and acting upon any information in this presentation. This is not a solicitation to invest. Hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. There you have it. If you need to take a screenshot, do so now. All right, here's the schedule. We're on Wednesday right here. Later today, we have Tony doing beginner waveology. Those are important classes. I say it every session. Understanding waveology, if you're using tab 29, which most people here are, if not all, is paramount to your success. The exposure, you can go back through the past sessions of those to watch and learn, but some very important stuff. So then tomorrow we've got Josh and Stephen Ma. There is no Tony today, just in from Zoe. So if you have time and you haven't watched the past sessions, go through his sessions, Clay's sessions. Josh Casey has done some sessions. They all have a little bit different take on what they see, how they read it, different time frames. So make sure you go back through those. It's good stuff. Good stuff. All right, Power 62 session. Taking your questions today. '62 EMA on time period. Harmonic targets. Shadow bands. 513, 62. EMAs, how they interact. What do we got? 34, 21 to the 62 on the 30-minute. A couple of those last night, overnight, I should say, here in the States. All kinds of good stuff. Passing checks. On the 62, 62 bounces. Price likes to come back to it, check it, take off again. All right, let's see what we got here. So on the 240, the 5 is your 5-minute 62. 13 is your 30-minute 62. It's funny you ask that because let's see, on the 240, no, that wouldn't be, because on the 240 your 5 is going to be 1200 minutes, because it's 240 times 5. And on the 5 times 62 is only 310. So yeah, it's not even close. No, it shouldn't even be close. But on the 30-minute, your 13, 30 times 13 is 390 minutes. And on the 5-minute, your 62 is 310 minutes. And depending on where you are, what has happened in the last 6 to 7 hours, these values will be very close. I think that's some of the relationship. If you went through Shredder, you have the relationship between the 5 and the 30. As far as retrace extremes, or when you do 5 into 30, those two are real close. But yeah, on the 240, it's too much. The numbers are too big. But there is a good working relationship between that's also why, like on a 5-minute chart, when you get a cross, a 51362 cross, or the 13 crosses the 62, that's usually a 30-minute wave more often than not. So yes, absolutely, scales down. It's just the ones that are close to each other, to me, it creates congruency, right? A lot of times price pull up, price will pull up, it's pulling back, and we're seeing it, it didn't quite get to the 5-minute 62, or it went just past it just a little bit. See the 5-minute 62 is coming through like this. When on all actuality, if you look on the 30-minute chart, it's actually bouncing off the 30-minute 13 and then takes off again. And this happens to be down below. We've got a 5-minute extreme, 10's down there. on a 1 minute chart. Either depending on how far that 10 pulled down, you might have a 10-minute 10-1 convergence, or at the very least, it's usually be a buy into the sell there. So not necessarily on that, Robert. This one's odd here where, and that again, in Forex, nothing's 100%. It's way out at this is the shadow band 55 up. And I've been wandering. See the 4 hours stayed pretty tight up. 30-minute pulled all the way back. And this usually here is the 34 on a 30-minute chart. So 30 times 34, 150, 170. No, it even went through that. That's one of the 13% that didn't make it to the 62, not saying that it won't pull back down. It went all the way back out to the 34 now. But it'll usually, when you get this cross here inside the 20, see how the 5-minute crossed right here. Then you do a pass and check inside the 21. It's usually a pretty strong move down to the 62. And Steve gave us the odds as 87% of this is going to go here. When you get that pass and check on the 5, a lot of times that's the last hurrah before it goes down in. Again, that's a move you could wait for. Depends on the day. It doesn't happen on every pair every day. Sometimes price is ranging. It's not getting out to that 34. These are 30-minute shadow bands. It's not getting out to that 34. If the price is moving good, it does. Here it's out past the 34. Right here, it was all the way out to the 55. Comes inside the 21, pulls back, pulls up. And this would be more than likely be a 10-1. The odd thing about this is that you're almost always trading against the 4 hour because this had pulled down so hard that you're here and it takes it to it. Takes it to the 62. Uh, 55. A lot of times the 55 is an end to run on the USD pairs, or let me rephrase that, on the pairs that don't move as large. Some of your bigger movers like the pound yen, etc., might go out to the 89 or the 110. If you're working with harmonic scanner, you'll see that a lot of times this is a D point of a scan when it gets out to the 55. And just you look, it was way up here. It's got to get back to here at some point. It's about 24-hour period there, or a little more. Yeah, the euro odd. The odd's funny because like the USD odd will just kind of wander around, make it small channels, and then all of a sudden it'll 140 pips in a day. So when it gets on a tear, it goes on a tear. There's another one where it was at 34. This one was pretty direct. I think there was a little bit of 1300, a little bit of news right in here. It bounced around, we crossed, and went right up. Not much hesitation there. And this is the yen, the USD yen, so it likes to bust a move and then sit still. This one wasn't quite, just a little short. See how it crossed down, then back up. Pass the check. Nice thing with the new paradigm, we can get in there tight. See how that was a 5-minute extreme right here. 97, 77, 10 pip channels right there. Again, it all depends on what you want to trade. Five-minute cross. That'd be a 10-1 right there. 30, no, not an influence. Not a real big pullback though. 80, 73, 8 pips. We're in a good spot. Here we got 34. Can't break the 21. Comes back. Breaks it. Doesn't quite make it. And then on the next one, it tags it. This right here was probably pretty close to a 10-1. Again, you got this 4-hour laying on the ground, so myself, I prefer to trade this way into it. But this is such a high percentage move, so try not to operate in conflict there. Most of the 10-1s without 30 or with 30. The 10-1s just depend. It's like this is going to be a 10-1. The 30's up here. It's coming down a little bit, but it's short term. Next 7, 8, 10, 15 candles. It's not an influence. It's not right here. The trick with the 10-1s is saying, okay, there's my trend right there. Bend my line a little bit. Price is moving up, so I want the bottoms. Don't necessarily want this one. If we notice that was the pullback. Even this 130 isn't an influence, even though it's been pulling down off the 30-minute 62. Up you go. That's why pitchforks are good, because set a pitchfork on this, it'll give you what you should be trading bottoms in that case. We notice 4 hour from here, from out there, went from bottom to top on this move. Kind of choppy and wicky, but for example. Another one here where we're at a 30-minute convergence. Get a nice pullback. That'd be a 10-1. 30 is not an influence. Basically a retrace extreme. 95, 76, 19 pip pullback. If you're in 2 or 3 pips, good chance we're going to make another 30-minute convergence. And here we are sliding into the 4 hour with the potential to basically 4 hour snake. Right in here we get back to a higher high. All right, other questions? Shadow bands on the 1 minute, yeah. It just depends on what you're trading. Some people use them exclusively. Some people trade them with like 5 minute or 30-minute shadow bands, wait for an energy point with them. A lot of it depends on the pair too. Some of your pairs that move more, you'll get nice bounces out, 8, 13, 21. So potential support and resistance, right? The 5 minute pairs nice with the 5 minute wave, if you will, pairs nice with the 30. And you will see, as you learn waveology, you'll realize that a lot of times 5 minute extremes are the end of a pullback on the, prices pulling down, but it had been moving up, that 5 minute extreme is the end of the 30-minute pullback. So essentially it allows you to get into a 30-minute wave, the same as a 30-minute wave can do the same thing for a 240. Example being right here this morning. I didn't look see if there was news here, but see how it was at a 240 convergence right here. Again, this is waveology. Based on what I'm seeing here, this was probably the convergence. Yeah, this is a little lower high, but the 30-minute pulled all the way back, and the 240 is not an influence. So you're stepping up from a 10-minute, more advanced trade. If you haven't done your 10-1 trades, do those first. Essentially, it's the same concept. The thing is, with a 30-minute trade, the slush box is bigger, right? The turnaround is bigger than a 10-1 trade, where right here it could be shown, oh yeah, you're right at the 62. Let me get in that. 1 minute chart, pulls back 2 pips, trend bar flip, -3. So with a 30-minute, it's different head game, it's different money management, different risk reward risk. All right, other questions? If you're just getting started, follow the process. Start with 10-1 convergences where 30 is not an influence. And a lot of times, those are great trades. Example being right here. That's a on a 1 minute chart, that's a 10-1, 30 not an influence. But in all reality, it's a retrace extreme of the basically, this 30-minute wave pulled back here disproportionately. If you're a shredder trader, you learn that. But by taking that 10-1, 30 not an influence, it allows you to get into that without fully understanding what's going on. And so a shredder trader would know that there's a high probability, 80% of it making another 30-minute, going back to another 30-minute convergence. And so when it comes up here, doesn't get excited. We're not at 30-minute convergence yet. The 5 cycles here, we're getting a little closer. But part of a definition of a 30-minute convergence is making a higher high than this or this. So here we're not at a higher high. Here we're getting real close. 30's not quite up there. The waves are blocky. They reloaded on me overnight. So this would be a potential exit. You're right at a double top, basically. You went from 77 to 95. And if you got a 40% trail, you're getting taken out in this pullback more than likely. So again, money management, trader's choice. But I will say not being overly greedy helps. And just working with the math. It's all about math. That's a direct quote. All right. Any last questions? Otherwise, we'll wrap this up for the week. It's good to be back. Those that were on my session yesterday. Talked just a little bit. I was on a mission trip last week up in Nicaragua. It was pretty cool. We'll be doing more of that in the future. It's fun to give to others, give of ourselves and our time. Money's one thing, but spending of yourself is another. So from where I live, I have the luxury, if you will, of it only being about a 5-hour drive up to the area we went to. So, which kind of helps cost-wise. But if you're interested in any of that, it's not live. I talked just a little bit at the beginning of the session. So there's a picture of the family I sponsor also, which is kind of cool because where we go, you actually go to their house and meet with them and their parents. And so it creates a pretty strong bond for everybody involved. Different than sending, $50 off to Africa, which, still good, right? But when you go up there, help out, help the community out, help the school out, and then actually meet the parents and meet the kids in their own house, pretty life changing. So that's it for today. Thanks for coming. See you next week. Bring your questions and have a good week.